Hi there, my student. Welcome back. I want us we continue with the topic of cash flows. So remember, in our previous class, we have defined what is a statement of cash flows, and equally we have looked on the various methods which are used in preparing the statement of cash flows. So in this class, before we look on an illustration question, I want us we look on preparation of various accounts, because what I've said is that in doing any question for cash flow, there are a number of accounts which you must be in a position to prepare. So therefore, I want us to look on the preparation of those accounts, around 4 or 5 accounts which you must prepare in order to determine a number of what items. So the first account, I want us to prepare, or basically look on how it is supposed to be prepared, is an account which is called disposal account. Disposal account. What is a disposal account? This is an account, or is basically a ledger account which is prepared to determine whether the asset were disposed at a gain or at a loss. So if you're told there was some asset which were disposed by the company, you may be required now to compute the gain or the loss on what? A disposal. So how do we prepare that account? But before we look on the format, we can say that this is prepared to determine the profit. The profit, in other terms, you also refer to this as a gain or the loss on disposal, or the loss on disposal. The loss on disposal. The disposal basically is the sale of what? Is the sale of asset. So how do we prepare this account? How do you prepare this account, the disposal account? There are 2 formats you can use here, depending on the information which you are given. The first format is that you debit this account with the cost of the asset which was disposed. You credit this account with the accumulated depreciation of the asset disposed and the sales proceeds. The sales proceeds. The sales proceeds is the amount at which an asset was sold at, and then from there what you do, you balance this account. So the balancing figure in this account, if on the credit side, it is a loss on disposal. If it is on the debit side, it is a gain or a profit on what? On disposal. So that's how the first format of preparing this account. Also, you can prepare this particular account here. This is the other format you can use to prepare the disposal account. And in this case, I've said the format which is used here depends always with the information which is given to you by the examiner. So here what we do is that we debit this account with the net book value, or the carrying amount of the asset now which was disposed of, which now the net book value. This is the difference between the cost and accumulated depreciation. So mean that if you record the net book value, this factoring in 2 items, the cost, the accumulated depreciation. So it means that when recording, or if you debit this account with the net book value, then on the credit side we will not have the accumulated depreciation. On the debit side we will not have what? The cost. And then what we have on the credit side are the sales proceeds. The asset was sold at an amount of how much? We compare the two. And then the balancing figure, if on that side is a loss on disposal, if on this side is a gain or a profit on what? And disposal. It's also important for you to note that these 2 items, the loss and the gain on disposal, these are what? These are a mutually exclusive item. So you can either have now the gain, or basically what? The loss on what? The disposal. You can either have a gain or a loss on disposal. You can't have both. You have a gain and also you have what? A loss. So that's how we prepare that account, of which you have said that this account is prepared to determine the gain or the loss on what? Disposal. The other account which you must also prepare is an account called the taxation account. Taxation account. Now the tax account is an account which is prepared to determine the amount of tax which was paid. So we can say that this is prepared to determine the tax paid. the tax paid. It is prepared to do what? To determine the tax which was paid. So how do we prepare this account? The taxation account or just the tax account? So we take into account or we record the opening balance here for deferred tax and current tax. Now the deferred tax and the current tax, basically these are items of liabilities which will have been given in the statement of financial position. In the statement of financial position, the non-current liabilities will be given something called the deferred tax, and then the current liabilities, you'll be given something called what? The current tax. Record the opening balance and then the closing balance down here for deferred tax and equally for current tax. And then you also record that the tax for the current financial year, which is in the income statement. You go to the income statement and you take into account now the tax for the current what? For the current year. And then from there, what you do, you balance the account. So the balancing figure on this side, this represent, if you get a balancing figure on this side, that is basically a tax refund, and then a balancing figure on this side is a tax paid, So mostly you will get the tax which was paid, but if you get a balancing figure now on that side, automatically that will be a tax refund. So mean that when preparing now your statement of cash flows, this tax refund take into account is money which was received by the entity. You don't take it as a cash outflow, but you take it as a cash what? As a cash inflow, So that is the other account which you must prepare. The other account which must be prepared is the account called the property, plant, and equipment. That is a PP account. PP account. Now for this particular account here, mostly it is prepared to determine whether there were some items of PPE which were acquired during the current financial year. Because if there are some items of PPE which were acquired, which were purchased during the current year, in most of the cases, the examiner will not give you the value of PPE which were acquired. You have to prepare the account called what? The PP account to determine the PPE which were acquired. So therefore, you can say that this is prepared to determine the PPE acquired during the year, Prepared to determine PPE which were acquired during what? During the current year. So how do we prepare this account? The PPE account. So first of all, we record the PP at the start, and PP take into account these are assets. We know asset, they have a debit, what? Balance. So record the opening balance on that side, closing balance down there, and then on the debit side, there are a number of items which we record. For example, revaluation gain. So if there are some items of PP which were revalued during the current year, any gain, we put it on that side. On the credit side, we record what? We record disposal. These are items of PP which were disposed. We also record now any depreciation should be credited, and any revaluation gain. Any revaluation what? A gain. And then from there, what you do, you balance your account there. So mostly, you'll have a balancing figure on the debit side, and a balancing figure on this side represent the PP, the items of PP which were acquired. That will be the balancing figure, and that what you take into account when preparing now your statement of what? Of cash flow. The last account which you must be able to prepare is an account called the government grant account. So what is a government grant? First of all, in a government grant refers to any form of financial assistance which the company receive from the government to undertake a project which is meant to benefit the members of the public. Now, such government grant, once received by the company, how do the company account for such government grant? The company will debit the bank account, the amount of money received, and then it will be credited in an account which is called the government what? A grant. And therefore, government grant, this is actually recognized or recorded in the statement of financial position as what? As a liability. And then what the company will do is to use that government grant in terms of undertaking that project, which is meant to benefit the members of who? Of the public, of which that particular project may take like the next 2 years, the next 3 years to be completed. So therefore, ordinarily what happened is that this government grant which was received will have to be amortized, will have to be written off in the next like 2 years or in the next 3 what? Years. If the company expect to complete that project in the next 3 years, then that amount should be amortized, should be written off in the next what? 2 years. And then amount which is amortized is recognized as an income. If you can remember when we were looking on the format for preparing the statement of cash flow, we said government grant amortized during the current year is recognized as an income, but essentially that is a non-cash item, because the government grant which was received is which was debited in the bank and then credited in the that account. So therefore, this account here, that is a government grant, this will be prepared to determine 2 items. One, we can say this is prepared. This account is prepared to do what? To determine amount of government grant, grant which was received during the current year, or you can prepare this account to determine the government grant which was amortized, which was amortized during the current year, during the year. So therefore, you may not be given any of these 2 items. That is the government grant which was received during the current year. You may have to determine that, and then, or you may not be given the amount of government grant which was amortized during the current what? Year, of which you need to have those 2 items in preparing now the statement of what? The statement of cash flows. So how do we prepare this particular account here? The government grant account. Remember what you have said is that once the government grant is received, it is basically debited in the bank account and then credited in the account called what? The government grant. So therefore, the government grant in the statement of financial position, it is a non-current liability. It is a non-current what? Liability. So always, once you go to the statement of financial position of the company, you'll be given government grant under non-current liabilities, and you'll also be given government grant under current liabilities. So take into account the government grant under non-current and also current liabilities as the opening balance on the credit side, simply because that is a liability, and then you do the same at the end of the year. The government grant under non-current liabilities and government grant under what? Under current liabilities. Under current what? Liabilities. Then also, the government grant which was received during the current year, and that is, I've said, is one of the items you may be required to compute. Government grant which was received during the current year, that always is on that side, because you have said government grant received, debited in the bank, credited in this account. The amount which you record on this side is the government grant which was amortized during the current year. And remember what we have said is that this government grant which is amortized during the current year, basically this one is recognized as what? Is recognized as an income in the income statement. So therefore, by preparing that account, you may be determining either of those 2 items. How much government grant which was received during the current year, or how much government grant was what? Was amortized. So therefore, these are basically some of the accounts which are very important, some of the accounts which you must be in a position to prepare anytime you are doing a question for what? For cash flow. So once you are able to determine these accounts, you'll be in a position to determine, to compute so many items which are required in preparing, in presenting your statement of what? Of cash flow. So I want us we end at that point, and then we come back in our next class or in our next lesson, so that we can look on an illustration question regarding the presentation of the statement of cash flows.